AI crypto is exploding after the Bitcoin halving, and Bitcoin runes have launched with huge success. This is your Altcoin Buzz News. Hey, what's up, everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when I drop the latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, it's not financial advice. We wish you the best of luck in your crypto ventures.
And so if this market pulls back hard under this level and then consolidates and comes back, we're likely to sell and stall.
The cryptocurrency sector witnessed a huge surge in AI coins following the recent Bitcoin halving event, marking a significant shift in market dynamics. As the AI sector gains momentum, investors speculate on the driving forces behind this rally. CoinShare's latest mining report update delves into the evolving dynamics of the crypto mining industry, highlighting a notable trend towards the AI sector. With investors and miners redirecting their focus, AI coins are gaining increased attention within the cryptocurrency landscape. Notably, the report underscores the potential for higher revenues in energy-secure locations, prompting companies like BitDigital, Hive, and Hut8 to explore artificial intelligence opportunities. Meanwhile, according to CoinShare's analysis, the hash rate is projected to rise to 700 exahash by 2025, despite an anticipated short-term decline post-halving. Hash prices are expected to decrease post-2024 halving, presenting challenges for miners as electricity and production costs surge. Despite these challenges, miners are actively managing financial liabilities and exploring revenue diversification avenues, including AI ventures. However, AI's adoption presents challenges, including the need for specialized infrastructure and skilled talent, creating barriers to entry for smaller entities. Despite these challenges, companies like Core Scientific and BitDigital are actively pursuing AI ventures, aiming to capitalize on the potential for higher margins and revenue diversification. Bitcoin's once every 4 years halving, which took place late last week, was supposed to bring a steep cut in revenue for crypto miners, since the rewards for new data blocks would drop by 50%. Instead, the simultaneous launch of Casey Rodarmer's new Runes protocol for minting digital tokens on top of the oldest and largest blockchain has proven so popular that it caused a massive network congestion, sending transaction fees to record levels and showering Bitcoin miners with a windfall like never before. Bitcoin transaction fees averaged a record of $127.97 on April 20th when the halving took place and Runes launched. That's more than 7 times the average fee rate on the day before and roughly double the previous record high set 3 years ago. Total revenue for Bitcoin miners, which includes the block rewards as well as transaction fees, soared to a record of $107.8 million for a single day. The quadrennial halvings were part of Bitcoin creator Satoshi Nakamoto's original design when it was launched in 2009 as an effort to harden the original cryptocurrency's resistance to inflation with an ever-decreasing pace of new issuance. But with the reward shrinking for miners, the question has been whether they would see adequate incentives to continue mining on the blockchain, crucial since their efforts are essential to the blockchain's network security. Runes is a new protocol from the mind behind Ordinals, Casey Rodarmer. With Ordinals, the Bitcoin developer made it possible to create NFT-like inscriptions on the Bitcoin network, and this, in turn, made it possible to trade JPEGs for magic internet money right on Bitcoin. Rodarmer described his Ordinals theory as a lens that you can view the Bitcoin blockchain through, and when you view it through that lens, these trackable Satoshis pop into view like Pokemon in the tall grass. So in this sense, Runes similarly represent a new lens which to view Bitcoin, but this time with meme coins. The Runes protocol picks up where BRC20's left off. BRC20 is a fungible token standard, which itself makes use of the Ordinals protocol, and was developed by the dev Domo. Runes is an attempt to make the process of creating fungible tokens on Bitcoin more efficient. Whereas Ordinals or inscriptions are non-fungible tokens, unique identifiers meant to house data like collectibles, art, or trading cards, BRC20s and Runes are fungible tokens. Fungible simply means that they're interchangeable like dollar bills. Like BRC20s, Runes will use Bitcoin and pay fees in Bitcoin to create new tokens. The key difference between Runes and BRC20s is that Runes, like Bitcoin itself, uses an unspent transaction output or UTXO model, as opposed to an account model, the same model used by some layer 1 chains like Ethereum. Many Bitcoiners believe the UTXO model to be superior and that using the account model is one of the reasons Ethereum falls short. With Runes, the issuer creates a token and sets a limit for how many someone can mint in a transaction. While Ordinals are inscribed, Runes are etched. The etcher can pre-mine a certain allocation of the token for themselves ahead of the public mint as well. Certain marketplaces will support Bitcoin Runes, allowing users to list and trade them on their platforms. OKX has a marketplace for trading Runes, where users can list and buy runes, including Arsic and Satoshi Nakamoto. NFT platform Magic Eden has also launched a section for Bitcoin runes, including a pre-rune section for yet-to-launch Bitcoin rune projects. While Bitcoin runes are minted on the Bitcoin blockchain, they require specific wallet applications for asset management. Users can use wallets like Xverse, which also supports BRC20 tokens, to manage their Bitcoin runes. Our partners at Morpheus Labs have just launched their seed staking program. Morpheus Labs helps Web2 firms to transition into Web3. Morpheus Labs are combining two of the biggest non-crypto trends in tech, automation and low-code tooling, and they call it blockchain as a service. The Morpheus Labs platform covers different verticals, for example, the metaverse, NFTs, e-commerce, education, GameFi, and RWAs. Morpheus Labs sees three major opportunities in tokenizing RWAs. The global reach, where on-chain there are no borders between countries, transactions also happen within seconds or minutes. The programmability, where you can program digital assets, and this allows you to add extra functionality, as well as the traceability and auditability. On-chain transactions are transparent. It also allows for authentication of assets. It also helps with regulatory compliance and auditing processes. You can also apply the tokenization of RWAs to various verticals, for example, finance and banking, art and creative industries, real estate, and gaming. Morpheus Labs Seed feature stands for Solution Environment for Enterprise Development. It's a great tool and helps with tokenization in various ways. To clarify, Seed is at the heart of the transition from Web 2 to Web 3. Seed offers four key features: a collaborative development environment, Web3 APIs and SDKs, RPC node infrastructure, as well as Web3 application marketplaces. To tokenize RWAs, each part plays its own role. Developers can use ready-to-use templates, and it's a complete blockchain as a service solution. One of the AI-driven tools is the Smart Contract Studio. This is a great tool to help with RWA tokenization. And recently, Morpheus Labs has shared on X, announcing the launch of the ML Seed staking program with mined tokens. Morpheus Labs is thrilled to unveil the highly anticipated launch of our staking program, providing an exciting opportunity for our community to engage and participate in the growth of the ML Seed ecosystem. Check out Morpheus Labs and their staking program with a link down below. The smart money protocol Umoja has joined forces with the Bitcoin Layer 2 initiative Merlin Chain to roll out a Bitcoin high-yield synthetic dollar. The newly introduced stablecoin is engineered to uphold a self-sustaining peg via transparent on-chain trading techniques developed by Umoja. On Tuesday, a joint statement from Merlin Chain and Umoja unveiled the new stablecoin USDB, branding it as the inaugural Bitcoin-based high-yield synthetic dollar. The integration of Umoja's Synths technology with Merlin Chain's Layer 2 framework ensures USDB is a refined mechanism that aggregates Bitcoin assets to produce substantial yields while preserving its peg to the US dollar. The synthetic asset factory at Umoja is capable of crafting a synthetic version of any cryptocurrency through tokenized trading strategies known as synths. These are designed to generate superior yields and provide enhanced security. Synths mimic the operations of conventional financial instruments and decentralized finance trading tactics, engaging in derivatives trading on centralized exchanges and various DeFi protocols. The launch of this new stablecoin coincides with the rising popularity of Athena's high-yield stablecoin USDE, which currently boasts a market cap of about $2.38 billion.